Hello traders, this is Alex with the Matrix program. It is March 15th, about 8 in the morning, 8:30. I'm going to do a review of the commodity matrix. It's kind of been updated a little bit. Um, I'll go through that, but this is the X account, kind of where I save some of the stuff so you guys can review it. And my handle is CBOTman33. All right, let's. I don't think I'm going to review the charts on bar chart today. I'm going to go through the charts, my matrix charts from my spreadsheet that I created, so you have an idea how it works. And now, again, if you've been with me through the stock matrix program, that was a similar setup. The commodities that I had set up were a little different. They weren't based on the quarter moon as such, and I'll kind of go over that as well. Here's the list of commodities that I post. Um, Kind of a longer term strategy. I used to do it a little more short term, but it takes up way too much of my time for free. So this is kind of a longer term setup. And I started everything on December 31st. You know, if the trend was down, I put the close of the March 31st and went from there, right? So now it happened to be that in the commodity world, most of these were on a low, right? So it's going to show I had some pretty big losses, but I made huge profits at the end of the fourth quarter, you know, last year, 2025. But once I entered it, you know, it happened to be a low, which happens. The same thing happened when I did the stock matrix program. It took me a quarter just to break back even from the, again, because it was a low in the stock market as well or something. Anyway, let's review the charts here. Here is the corn, and you can see it's kind of a point and figure setup, right? So it has to be at least 3 boxes before it goes up. So 3 boxes of time, right? And then it keeps sliding, and then finally the stop got hit here, and now I'm long. Now the new stop is down here, which is a sell stop, right? And it'll get moved up next period to here. So these bigger periods are a little bit of a problem child for you know, because again, I'm not adding any variabilities into this program. Now you should, right? But I don't. You know, when it's slower, you should spread the time out more. When it gets faster, you should narrow the time width, right? Maybe even do an hourly chart or something. I'm not doing that, which is not ideal, but that way, again, you can. A lot of people don't trade corn. Some people, that's all they trade, right? So you can adjust your theory once you get the market moving a little bit. And the grains are pretty slow right now. They're pretty docile. Now here's the soybeans. You can see it had a pretty good trend up since the first year. Of course, basis, you know, the end of the year, right? We were short and then spun out with a loss, but you can see that the profit is now riding. Again, a system like this catches these bull or bear runs, and that's where you make your money. Hopefully you break even or a small loss on the chop or these secondary events, right? Here's your main low, your pivot, which to me is the most important out of all of them, all three of these. And here's your third low. So you have basically an ABC or 1, 2, 3 event, and we broke that out. And so now as a swing trader, right, you're buying the dips. Not necessarily just going long just because, but now at least you're comfortable knowing that you can buy the dips. Same way when I get long on my system, that tells me that I'm more comfortable buying shorter term calls, you know, and doing things based on that, right? Because the trend is now up officially on my chart. Well, that's not here nor there. I won't go through those. I keep track of the longer term since, again, the beginning of the year. I just put the close of that, right? So again, at the end of this next year, 2026, I will put the close in again, and whatever it is, up or down, then I'll transfer that into the next year. That way I can keep track of the data. I'm not going to do it a quarterly basis, which I would do if I was getting paid as a fund, right? I'd do it on a quarterly basis. I am not going to do that. I'm going to do it on an annual basis. All right, here's the wheat. Again, similar situation. Again, you can see also I keep track of the eclipses, and this is the midpoint, right? So this happens to be the next midpoint right in here, right? So pretty key to me. But the stop's now down here. Now, of course, it'll get moved up a little more profitable. We're at a small loss here at the current time. Now, if the trend isn't completely busted, you know, the whipsaw could continue. Now, if the trend is up, I think, you know, we'll start raising our stops up quite significantly. Here's the soybean meal. Again, a good secondary event, possibly. Now, here we have not broken the pivot yet, right? So we can't confirm that. But based on the beans, you got to assume. Now, again, if meal doesn't go up, beans are probably at their high. Because again, meal's the key component. You know, I don't do bean oil on here, but that's your second component, you know, of the products. Here's coffee. You know, this has been a violent mover, and you can see from solar eclipse, which was the high. Now the solar eclipse and lunar eclipse sequence was the low potentially, right? We don't know yet. Especially even our chart would have to get above here before we can confirm a potential low. Now, Gann used to use a 2-day trend line indicator. This is a little similar but different, right? This is a quarter moon chart, so about 7 days, but it's not a weekly, right? Because the quarter moons are a little different. So a lot of times you'll have quarter moons in the middle of the week, right? So it's definitely a different chart. Sometimes it's the exact same as a weekly because it falls on the weekend, right? So, which adds actually some competitiveness, I think, and also some more volatility when that occurs. Here's the cotton. You can see that this market is, had a solar eclipse high last time, and this one was kind of that low area. The cotton's been a dead dog, and one that catches me in my mindset that I don't think I want to be short cotton. I mean, I think if you could buy calls out in the way out distance, I think cotton's way too cheap. Um, Now, I don't know anything about the fundamentals of cotton. Don't get me wrong. I'm just based on the 4 decades of trading, going on 5, that I think cotton is a sleeper right now, and one should be prepared for a wild ride. And again, one thing, this is my opinion on my experience, is these markets are taking turns, right? It was the lumber that started the whole move off. Then the orange juice, sugar had a ride, the grains had a ride, um, and then the silver and gold had got wild, right? And now the crude oil had a real wild ride, and that gas. So those, and the stock market's been on an invincible bull market. So everything's taking turns. So when you get a big smash down, that also is cyclical, and we'll get into some of those here in a second. Here is sugar. You can see from the lunar solar sequence, it was a high. This solar was a low, and it was the lowest close. So not only was it, and it also made a trap. Now I trade March pretty much only. So obviously this was March. There's March, 25 and 26, and I'm on March 2027 right now in these quotes. So just so you know, I like to trade March only. It saves a lot of time, but you miss out a little bit, right? I mean, but you don't lose as much when you're wrong, right? It's a trade-off. But anyway, this is a bear trap, which to me caught my attention. And then the solar was right in the hunt, and we had a higher close. I'm pretty positive sugar. This would be a confirmed breakout and a confirmed bear trap low if we could get above this swing. So, and it might probably do it on a gap, right? I mean, that's the tendency of these markets is to gap above major support or gap down on resistance. All right, here's the orange juice, a violent market, man. This doesn't even show the volatility. We were 500, 600, but I mean, it's dropped 87% right down here. Now, again, I probably don't trade the actual spot chart like this per se, but I had to chart it this way because it just doesn't, November has like just bars for closes. There's not enough volume in those deferred months. So I am kind of trading a spot chart, just so you know. I don't like that. And again, that's the easiest part about trading stocks. You don't have to worry about all the spreads and the rolling and all that, right? You trade one stock, you don't have to worry about the months. And these are weird months, January, March, May. I think it goes like SEP and then NOV. I mean, no D's. So anyway, but that's the orange juice. Again, potential, right? Secondary event. We don't know that. This will confirm it. If we can break above this pivot. Again, that theme is important to understand as a index, right? As a commodity index. They used to have the CRP back in the day, but that is if everything is making a secondary event, and the stock market's been up too high for quite a while, the commodities have been played out down to the bottom side. It just tells me that you roll out of your stocks and metals and get into some more of these actual commodities, food grade commodities that you eat, you wear, you smell, you touch. Makes a lot of sense. I mean, it'd be nice to you own a bar of silver, that's great, right? You can't really own a lot of orange juice. It doesn't make sense, right? So the way to really trade it is paper, and you don't want to be in the deliveries on any of these products for sure. All right, here's crude oil, and you can see that we had quite a wild ride. Nice, easy, nice bottom. It confirmed to me mathematically also that this low was good, and now we've had this big push up. Again, this is July. You can see it right here, and the N is reference to July. The spot month's even been more incredible, right? It went to 120 or something wild. I don't like trading spots on any of these. Now, of course, it's more money if you're right? But a lot more money if you're wrong. So this is net gas. I'm going to go to this chart. I also created it's a 2 by speed on the skin. This is a square of 9, right? 72 squared. I do the division to get it on the chart. But this one is a 2 by 1, and this is a 1 by 1. Now I'm using this actually to trade because I want to have less risk on the stop, but you can see it hardly fits on the chart. Anyway, here and there, right? But here's the natural gas, and here's the eclipses. The midpoint was right in here as well. So kind of not really honoring those for volatility's sake, which is unusual. But again, for anybody that's never traded natural gas, it always should become on your radar about the end of the middle of December. You get, especially if you can find one of these lows, it always gets wild in January through March. Always. I mean, you can see the ups and downs of the market, and really see it here. Anyway, here is the S&P, and you can see the solar eclipse low, and basically the solar eclipse high was missed by a notch, but close enough. And the halfway point, excuse me, was right in here. So our halfway point is May, right in here. So between now this solar sequence that we just had, between this one is one of the shortest ones I've seen in a while. Actually since 2000. This is a short one. It was a full moon period, so 30 days, whatever, exactly 30.25, whatever it is, days different than normal. All right, so like just the quarter moons alone, um, I can't see it because I got a line in my way. It looks like 21, and from this one to the next one coming up is 25. So yeah, a full moon or 4 quarter moons difference, right? So this middle period was much quicker. This one is a lot more stretched out. So this, again, will be in here. Anyway, I find that fascinating. Um, I could give you my opinion on that, but it doesn't really matter, right? It's interesting, and I think it causes more volatility, more droughts, famines, floods, because again, the moons do affect the weather. The push-pull effect is much more rampant, and it also affects people's emotions. Politically, war. I can see why what we're doing makes sense on the moon basis. Let's go to the euro. You can see this little pop in the drop, volatility that occurred last moon period. The halfway point was the low. Now this one missed it, so it's close. I still think it was probably high, right? So we're coming down into the next period, and we have made a new low. So my bear trap feelers are on high alert. We had a bull trap up here. It really flew, but again, it came back down immediately and actually closed that same moon period below, right? So again, this trap action, for every action, there's an equal but opposite reaction. Here is the same situation. So I was looking for the bear trap throughout this whole time period. I didn't think it happened this quick. But again, this is the euro. I don't trade the dollar because it's not as enough volume. So uh, the euro has a lot more volume. Basically, it's the opposite of the dollar index. So the dollar's on its high, just so you know. Here's the gold. Again, it's been a powerhouse. You can see it's been pretty steady. I had to switch the speed to a 4x1 speed. 2x1 was off the chart. So if we ever get slow again, I might have to switch back. And it takes a while to do these charts. So it took me a couple months to get it set up how I wanted and get them all done. Because I had to change it a few times. I did this on a 2x. I got out to here and I go, oh, that's too wild. So I had to change the speed. Otherwise, you can't even see it, right? And again, for every action is equal but opposite reaction. So when I increase the speed, which decreases the size of the bars, my risk goes up because I'm losing more. Now I'm making more because I'm not getting stopped out as much, right? So there's a risk factor there. Now you can see, again, at the end of the year on this program, we had a huge profit. I don't even know what, but it was massive. And then we got long and got stopped out. So this wiggle, though, is in this year. So either this is this gold, again, I'm tracking December. I like December stuff. But this pivot is important to me. I mean, either it's over, or to me, this is a halfway point. So that's kind of my theory on things. Now, let me see. That was 18 bars. Let's go out. 18 bars. I can't quite see it. I got my little box in the way there for this video. All right, there's 18. Let's just put an X here. Now this would be the Gann square of the range, and I'm trying to show you here. So this is the 1-to-1 off the high, squaring it out with this range low, right? Now we can also draw from this low up to that same time zone back to the high. There we go. Let's change colors. All right, so this is the 1-to-1 of the range. So again, this is the time zone. If it stays in this range, the square is solid until June of next year or June of this year. So once we break out of that, then either in time or price, right? So this is the doubling action I think we'll see. Either it's going to go down. Yeah, let me just do it this way. Oh, come on. So this would be kind of the target area. down in here for time and price on the next square, right? The next square of the range, the box, right, that we just formed. So this would be the target in October. If this is a high, it'll knock out the low of the year. Now, if it goes up and breaks a new high, we can do the same thing. I'm kind of getting off. Oh, sorry. Kind of getting off target here a little bit on what I'm trying to. But that's why these charts are important, right? This is a square of 9 at a time, 4x1 speed of that, and this is. So the target is up here at 7140, we'll call it, round down a little bit. But you can see that this solar sequence, right, the highs came in 2 quarter moons before the solar. Well, this one comes in about 4 quarter moons after the lunar. So, it kind of makes sense, all these. But anyway, that's the target based on this range, and it's pretty important. There's always a doubling effect somewhere. Now, that ain't quite double. It's double the range. But if it's a really massive bull, one of those fiery, scary frickers like the OJ just had, you could double this price. I know that's kind of scary. Let's move on. Here's silver. You can see I already got kind of that drawn in. Oh, yeah, and also, since you've seen it here, this, if I can get it drawn in, this area here is the 50% level, halfway of the low to high. It's also in time. So April 10th, April 2nd will be pretty important. You don't know quite which one. Now, in the silver, it's a little more concrete. You can see it actually hits in between the May 6th and May 16th. That's the halfway point. You can see this one-to-one coming a parallel channel of the one-to-one from the low, and then off this low to this. So we hit it, right? So it makes sense a little bit. Now the one-to-one from the low, we're on it right now. So if and that's Sunday morning. So if tomorrow morning we could see a bust out, right, and there'll be some. This low is important, right, for speed. If it gaps down in particular, it could really get hammered. But I think the next level of support is right here at 74-ish, 74 and a quarter-ish, right? And this is our stop. So now if it's over, I'm going to get stopped out with a loss. The system is, and then we're going to go gangbusters for this low. It'll probably happen pretty quick. Now, if this is a pause in the market, like the old Stotler and Company Glen Ring tells you my age in the futures. But anyway, this would be a pause in the market, which probably take a time. But again, you can see a doubling of price. Some people are so bullish they can't hardly see straight. They'll believe in too much of the AI platforms out there that are telling you, oh, yeah, we're out of silver. Again, if we're out of silver, the high's in. I'm sorry. That's just my rule. I don't care if it's soybeans. If you're out of soybeans, the highs are in. Just plain and simple. I've learned that over the years. All right, if I'm wrong, though, and there's 20% left of silver and we're going to go flying up, then doubling that price, you're looking at 246, right? So that would be a target. And, of course, doubling of this range would be a target. So let me see. I won't do the same. This is a 31 boxes. So let's go 31 boxes from here. Again, this is all approximate. Going off my chart, that's around 204. I think 180 was one of my targets on the square of the range. Also 140 was kind of my target initially, which we missed. I won't get into that. But again, here's this high hit this, near this 50% level. System got long on the high day, which is concerning. Anyway, here and there. Let's move on to cattle. Cattle have been a wild one, really. I mean, I switched from April, and then the system, I had to go back because I like December better. April's always the wild one. And you can see how much range we actually had. Secondary high potential, so you got to be a little cautious if you're a cattle raiser to make sure you buy your puts accordingly and lock in your stuff. Watch your basis levels. I don't want to get into that, but anyway, this eclipse is either high or potential low, so you don't know. But I think you start making new highs above or below this range. I think it'll be pretty important. So, and then of course this was the solar eclipse close. That's the resistance, and we kind of went up into that resistance. So. Yeah, caution for sure. But that's the chart. It is what it is. The system is currently short this right now with a stop up here. So it sold it here, out here. So, and here's the Bitcoin kind of off the rails. Again, hammered. Both silver and Bitcoin both dropped 50% or more, a little bit ish, 50%, 52, I think, on the Bitcoin. But you can see that the potential low here. Here is March. I rolled it into my June that I'm trading. So the March lows are here, and this will be an important pivot area. We did have this gap, though. So all this crap is inside the range, which was a huge range, a lot of dollars amount. So really, in my mind, all this, I mean, the system doesn't care what I think, right? Which is good. But in my mind, um, this is all noise, right? This really nothing. You shouldn't trade this market until you make a new high or make a new low. Similar to this, right? Now this one made a new low, so obviously, but this is the main volume period when we never took out. This will be another one. So if we start making a new low, you got to respect it and assume something's bad in Bitcoin fundamentally. Now again, I'm going to say the same freaking thing. If the Bitcoin miners are out and there's nothing left to mine, or it's not profitable to mine, is it going to go up or is it going to go down? I contend it's going to go down. I think that's part of the problem why we made our highs. I think there is less and less resource, so I think there's I know that's counterintuitive. When you run out of something, it should go crazy high. I don't think that's the case. I think actually it's the opposite. When you run out of stuff, and soybeans as an example, when you run out of soybeans, China has been buying all it up because there's a drought and there's no more supply left. The highs are in every time. This big bull moves always happen at the most bullish, not at the most bearish. So that's the reason, because the highs are showing that is we had supply left until then, and then the supply ran out. Then it changed because there's no more activity. You can't buy anything. You can't sell anything. You can't do anything. So the highs on the futures prices are in. Now maybe the cash aren't, but again, the chicken or the egg. Do the futures come first, or do the cash come first? Do the commercial people follow the futures, or do they follow the cash? I contend they follow the futures. They try to look at both, right? But again, and that's the problem in silver right now. You can't hedge anything. So these little pawn stores and stuff, you can't hedge anything. The shit's too wild. All the way up through here, you're starting to hear in this time period that the um, processors of silver were backlogged at least 4 to 6 weeks. Well, that was the high. So that's telling you that all that cash silver is coming onto the market here in 6 weeks. Well, that caused this swing down. Now it doesn't mean that it's over, but there's a lot of silver out in the country. I guarantee you, I know guys with a lot, and if they can sell it, now again, it's got to calm down so you can actually sell it. But if they can trade their silver in for farm ground, they'll do it in a heartbeat, or sell it to get cash to buy the farm ground, or if you're in an industry, I don't know, right? Everything has its own merits. If you're in an industry that needs a new process and it costs $1 million, and you have a bunch of silver laying around and you can buy a new computer that does this process and save you a ton of money in your business, guess what they're going to do in a heartbeat? They're going to sell their silver, because silver is not their business. That's just an investment. You trade it off, and hopefully you trade it off and get something out of that you can use for your company. If you're a truck driver and you've got $1 million worth of silver and you can buy your new rig that will make you money down the road, and you can sell your other one for decent money or expand and have a new driver, guess what you're going to do in a heartbeat? You should sell that silver and buy what you're into. Now, if you're into the silver business, that's a little different deal, but most people aren't. Anyway, I'm so off track. This is the new platform of the commodity matrix. Again, I'm not going to post too much of this, get too in depth. You'll see this on Twitter. I wanted to show you how the charts work, right? So you understand the platform. So when you see these numbers, you know what I'm talking about. You can see what month I'm trading. You can see the entry level, which like on corn, we got long here, right? So actually right in this, so yeah, February 23rd, we got long, and our stop is here, and it'll get raised up every moon period, right? So now the short-term trend, I didn't explain that. Obviously this is the long-term trend where you're up or down, but there's also periods where, like here, the trend is actually up on the short term, but the long-term trend, because you're still short, is down, right? So that's what you see here, the short-term trend. We only have 3 down in the short-term trend, and that's the S&P, the euro, and the cattle. All the other short-term trends are up. So that's pretty interesting on its own merits. There's a potential here that these commodities are on a secondary event low, right? As a generality. So some made a new low, maybe a bear trap. Doesn't really matter. The whole concept here is, and some have already made and broke out of the pivots. So the secondary low is confirmed. Now, if that's the case, you can see and make a point that there's a lot of always people talking about equities versus commodities. I think now if you don't trade the commodities at all, but you trade them through your stock portfolio, maybe it's wise maybe to roll some into some of these food grade fuel. Crude's a little already too far gone. Metal's already too far gone, but maybe some of these other commodities that area in your stock portfolio concept. If you traded some in the past, anyway, I don't know what, that's not what I'm trying to get into, but it makes sense that the potential here that you could see the spread between the commodities versus equities start go up here. We're already seeing it. So sometime I'll create a chart and I'll post it on Twitter, but it'll be the spread between the S&P, which is an index, versus maybe the food grade commodities as an index, and show where it's at on the spread chart, because that'll be important to confirm my theory. Now again, some of these haven't broken out yet, so unknown. But anyway, I'm going to sign off. Everyone have a great week, and hopefully, again, we have March 21st is the new spring, beginning of spring. Volatility picks up usually around that. A lot of highs and lows do occur in the commodity world on that equinoxes. All right, later.